So that's the FNO setup. We have Sacchitanand Uttekar from Tradebulls joining in to discuss the technicals of the market now. Sachi, thanks very much for joining in. If you could just give us a sense in terms of the Nifty strategy, considering that we've been in this consolidatory sort of mode in the past few sessions.
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly, the market is displaying that pause. But if you look at the overall trend structure, for the last 9 weeks or so, the Nifty has maintained its closing above its 5-week exponential moving average support. Now, this particular support is placed at 25,315 kind of a zone. And that's why I think the writers are also adamant out there. We are not expecting any move below this particular level, and hence the strategy has always been to accumulate Nifty close to that, close to its 5-day exponential moving average support, which is placed around 25,400. On the lower side, one can keep a stop loss at 25,320 on a closing basis. Eventually, we are of the opinion that the Nifty may scale towards 25,700 and even surpass that particular hurdle to rally towards 26,000. If you look at the overall structure on the weekly scale, the positioning of the weekly ADX is very important. It is on a verge of a breakout. Right now, it is quoting somewhere close to around 24, and a breakout about 25 would be a strong indication of directional momentum. So I think this pause is healthy for the overall trend structure. The bias remains positive and the buy on declines strategy continues. One can keep a stop loss at 25,320 on a closing basis and expect a rebound back towards 25,700 during this particular week.
Okay. Sacchitanand, also, what's your thought coming in on the Nifty Bank? What are the levels we should keep an eye out on there as well, given Kotak came out with good, Q1 updates coming in this time? Is there something important to watch out for there in today's trading session, as well as your top bets also that you're looking at?
For Nifty Bank, the data is suggesting a wide range towards 56,500 as a support and 57,500 as a immediate hurdle. But if you look at 60 minutes charts, there is a good convergence of its short-term averages, and that's why we believe that this relative outperformance may continue and in fact may lead the Nifty as well to break out above that 25,500 juncture. So I think one can keep a stop loss at 56,920 from a trading perspective and expect a swing back towards 57,500. So bias for both the indices remain positive. Nifty Bank, as of today, is placed very well, but eventually we see that Nifty could swing towards that 25,500 hurdle and move towards 25,700. When we look at stock, both the counters that we are discussing right now we have communicated to our clients as well. That will be my disclosure. The first one is Tata Motors. If you look at the overall structure, for the last 4 trading sessions, the stock has been consolidating well. It has managed to sustain above its 50-day exponential moving average support, which is placed somewhere close to around 692. Even on the 60 minutes chart, so we are observing a kind of a triangular formation, which is again a consolidation contraction. We are expecting that the stock could see a good breakout above that 710 mark, and we may see a rally towards 750. Hence, we are recommending building long positions, keeping a stop loss at 688 on a closing basis. The first target would be around 710. The second target is placed at 750. The second stock which we have recommended is from the same space. Uno Minda has been in a very strong uptrend. If you look at the daily chart, there's a bullish pennant formation, which is again a good sign of continuation of strength. The OI addition has been significant, and we are expecting that this particular rally may continue towards its pattern target, which is placed at around 1230. Hence, we are recommending building fresh long positions here. One can keep a stop loss at 1088 on closing basis.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and taking us through your strategies. We need to take a short break, but as we do that, here is some good news.